So guys, welcome to the next video of this beginner trading series. The question is, what is a prop firm? Let's start with one of the most exciting opportunities in trading right now, prop firms or proprietary trading firms. A prop firm is a company that lets you trade their money, not yours. Think of it like this. Instead of needing $10,000 or $50,000 of your own money to start trading, a prop firm gives you access to a large virtual trading account. And if you make profits, you get to keep a percentage of it, often between 70% and 90%. So why would a company do this? Because they're looking for skilled traders who can make consistent returns. They're not interested in hype or luck. They want risk-managed, disciplined traders who follow a plan. If you can do that, you become a valuable asset to them. It's a win-win. You get to keep the capital and keep most of the profits. They get a small cut without taking all the trading risk themselves. Imagine this. A prop firm gives you a $100,000 funded account. You earn 8% in a month, which is $8,000. With an 80% prior payout split, you take home $6,400 without ever risking your own savings. Prop firms are changing the game for new and underfunded traders. They've created a way for ordinary people to become full-time funded traders, with the only requirement being that you know how to trade responsibly. But of course, they don't just hand out money. You'll need to prove yourself first, and that's where the evaluation process comes in. We'll talk about it the next couple of minutes. To give you some industry perspective, years ago, proprietary or prop firms, trading firms, only hired in-house traders, usually in big cities like New York, London. You'd need a finance degree, pass a formal interview, and work on site. But today, many prop firms have gone online and global. Now anyone in the world can apply and become a funded trader by passing a challenge. Now, let's just move on to the next section. Before a prop firm gives you access to their money, you must prove yourself through a challenge. This is called an evaluation, and it's designed to test your skills and discipline. Most evaluations have these goals. Hit a profit target. For example, shown in this on this page here, profit target $1,500. And it's usually between 5% and 10% of the capital they show here. Next, stay within daily and total loss limits. This company actually removed their daily loss limit, but they have this max loss limit, total loss limit, and trade a minimum number of days, often between 5 to 10 trading days. This company is specifically, it's 5 trading days. If you can follow their rules and reach the goal without blowing the account, you pass. Once you pass, they give you a live sim-funded account to trade. This is where real payouts begin. A common prop firm rules, shown like this company, takeprofittrader. Let's look at the kinds of rules typically. The daily loss limit, like I said again, it's removed in this case. This max drawdown, end of day drawdown. So, and then the minimum trading days is 5. In this case, news restrictions. You can trade news during the evaluation or the test period, and you're not allowed to take any overnight or weekend trades. So many firms want trades close by the end of the day or before weekends. Minimum trading days, just going to come back to that. Even if you hit your profit goal in 3 days, you may still need to trade next 2 days until 5 trading days. So this proves consistency. So another thing they have, be consistent. The most profitable day cannot be more than 50% of your total profits. So the least number of days going to be 2 days. So you make 50% the next day, 50%, you can pass it basically in 2 days, but you still need to trade the rest of the 3 days to pass. So are you looking for consistent traders? Now, once you pass the evaluation, you'll be given a real sim-funded account. The account works like a challenge account. But now your profits are paid out. Most firms pay you monthly or bi-weekly or offer profit splits like 70-30, 80-20 or 90-10, depending on your performance. For example, you earn $4,000 during a month, you keep 80% of the profits, which is $3,200, and the firm keeps the 20%, the $800. Some firms even scale up your account over time. If you perform well, they'll increase your capital to 100K or 200K or even more. This is how you build a real scalable trading career, starting from nothing. Why prop firms are ideal for beginners. So why this is such a big deal? Because most people don't have thousands of dollars to risk. Prop firms solve the problem by giving you access to capital, structure, and clear rules, which forces you to trade smart. You learn discipline. You trade with a plan. You build real experience. And when you're ready, you start earning consistent payouts without risking your own money. Now, I want to jump into an example to show you what I mean by risking your own money. Because if you take a traditional or normal broker like TradeStation and you want to trade a instrument like the Nasdaq or NQ in short, so let's go and search for NQ, the E-mini Nasdaq 100 futures, the NQ symbol. The intraday initial margin required is $8,678 for intraday maintenance. So let's say $8,000 to actually, that's the minimum amount of capital you need in your brokerage account. So going back to the propfirm page, in this case, the smallest account they give you is a $25,000 account. In this case, you can trade 3 contracts or 3 or 30 micros, but in this case, 3 contracts. Going back to the broker account, that's to have 1 contract traded. You need to have a minimum of 8,000 or 8,000 here in this case. So you can see that's the amount you have. If your account goes below that minimum intraday maintenance account, let's say drops to $7,500, you won't be able to trade 1 contract. You still need to top it up to the minimum amount required to trade. So in this case, trade 1 contract, that's the minimum amount. Right guys, that's it from my side. That's how prop firms are structured and worked.